Welcome back my friends. In today's episode, let me explain to you why 2021 is quite a difficult year to invest. What kind of investment approach should you go for in 2021 and beyond? You see, Ray Dalio said that we are like ants carrying crumbs and working in our short lifetime, that we fail to recognize big patterns and cycle changes. A part of the reason why I started this channel is because I want you guys to stop working like ants. And I'm going to attempt to educate you guys on viewing things from the top to bottom perspective, identifying macro trends, and make use of the knowledge and take smart calculated risks. Things will change drastically going forward, and hence this is what this channel is about, to help you guys see the broader perspective and not miss out on big pattern changes. This will be a two-part series as I want to explain clearly on each of the pointer and make sure by the end of the video you get to learn something. If you'd like to help us back, simply like this video and subscribe to our channel to support us. Thank you. Let's recap 2020 and view it from hindsight. When the March 2020 crash came, to prevent everything collapsing like dominoes, Fed had to step in to support the economy by printing money to buy up the bond market so that liquidity can flow and support the stock market as well. It is in everyone's incentive and for the collective good to save the economy by saving the corporations, preventing as much job losses as possible so that the government can continue to facilitate trades and collect taxes. 2020 March in hindsight, everything was dirt cheap, but it was easier said than done to buy in when everything and the news was creating a lot of fear. The hard thing about investing in 2020 was to have the courage and long-term clarity to buy up good businesses at discount. It is not easy, but fast forward to 2021. I think 2021 is a much harder landscape to invest in. Let me explain why. First thing, when government have to prevent job losses for its citizen, they have to bail and support all businesses collectively. Meaning to say, some businesses that are not doing well already are only surviving through government supports. This creates a lot of value traps in the market. The market as a whole have inflated in valuations. With so much money created out of thin air, the money is passed now to retail investors and businesses, and the money flow into stock market, crypto investments, and meme stock short squeezes. Everything is in sky-high valuation. Crypto has big fundamental problem of debtors fraud. I've made a whole video on this. I'll link it up and down below for you guys to check it out. When everything is overvalued because of too much money in circulation, one day, interest rates will be raised. This is to increase the cost of borrowing, reducing the amount of credit in the money supply. And hence, when cost of borrowing increase, businesses cannot take out credit to expand, and hence, slowing down growth. The market is a forward-looking weighing mechanism, and this will be priced in the future. This thus contributes to a challenging year to invest in 2021. Next, the whole pandemic have reset and disrupted the traditional way of doing things. For example, work are done with much less physical contact now. Just on this statement alone, companies like Zoom have benefited so much from this pandemic reset. Because more of us are going online to get our work done, and with the advent of AI and more demands for computing power, AMD will thrive too. I've also made a video covering this too. I'll link it up and down below. So I'll give you an example of how a pandemic have totally shaken the real estate space. So for your information, those that are not in Singapore, REITs is a popular investment vehicle for Singaporean. Investing in commercial REITs in the Central Business District, good luck to you. Last year was exactly how I spotted coffee shops thriving. Everybody was advised to work from home and a lot of businesses collapsed, leaving a lot of commercial property empty. People have lesser money to spend and they will frequent these value coffee shops to buy their cai peng. Coffee shops are actually secretly residential REITs if you think about it. A huge segment of their revenue comes from rental from subletting their property. Hence what I'm trying to say in 2021 is that the way we run our economy, the whole way of doing things will take a 180 turn. Not just consumption pattern changes, but disruption platforms that are coming our way in the next few years. AI, blockchain, DNA sequencing, etc. Disruption platforms like this will completely change the way we do things. Just like how steam engine and internet created new way of doing things and new companies emerge. There's an article written about how half of S&P 500 will be replaced in the next decade. And companies will stay on average 14 years in S&P as compared to 33 years in the past. I'll link the article below for your reference. When we make investment decisions, it's not as simple as reason A equals to result B. There are multiple scenarios occurring at the same time, and it is important to piece all these puzzles together to see the whole picture. So in conclusion, money printing causing overvaluation of stock market, consumption pattern and trend shift, inflation crisis, interest rate hikes, new technology disrupting is what we are facing in 2021. There is one more point I want to cover and it will take an entire video to do, so stay tuned. I hope you learned something today. Do support me by liking this video and subscribe to my channel. I'll see you next week.